The rapid expansion of artificial intelligence currently strains against a physical ceiling. The limiting factor in building larger, more capable models is no longer a shortage of silicon microchips or engineering talent. It is a sheer lack of raw electricity. The world's largest technology companies have the capital to build massive new data centers, but they are hitting a wall. They simply cannot secure approvals to draw power from the electrical grid fast enough to meet their development schedules. Curious, but there is a group of companies sitting on exactly what the tech industry needs. They already own the land, they hold the permits, and control massive active grid interconnections. They are legacy cryptocurrency miners. Take the Canadian operation known as Bitfarms. For years, they built sprawling, energy-intensive facilities to mine Bitcoin. Recently, management looked at their assets and realized they controlled the exact physical infrastructure the AI industry was desperate to acquire. To capture that demand, they had to dismantle the identity they spent years building. A hyperscaler, the industry term for a massive cloud service provider, requires stable, decades-long partnerships. They will not sign a 20-year infrastructure lease with a volatile cryptocurrency operation. So, the company rebranded as KEEL Infrastructure. They serve as a real-time test case for how a legacy crypto miner executes the compute pivot, deliberately shutting down their original business to build an AI backbone. The artificial intelligence race requires brilliant code, but those algorithms only run if you control the raw grid power necessary to turn them on. This chart tracks KEEL's first quarter 2026 financial performance. Revenue dropped 22%, and the bottom line plunged to a $145 million net loss. Typically, this indicates severe corporate distress, but here it maps a deliberate annihilation, excavating a foundation for wholesale infrastructure. KEEL funded this transition by liquidating portions of its Bitcoin reserves. At the same time, they completely abandoned their international mining operations in Argentina to consolidate resources. Across their North American sites, they are unplugging thousands of active, profitable mining rigs. The hardware itself is irrelevant to them now. The goal is to clear out the heavy electrical load at their substations. You cannot supply the massive energy requirements of next-generation data centers if your own servers are eating the supply. The short-term profit engine had to be scrapped to make room for high-density infrastructure. This graphic illustrates the new strategy. The revenue model moves away from volatile Bitcoin pricing, shifting entirely to predictable, inflation-indexed lease agreements. In this wholesale colocation model, KEEL provides heavy power feeds, while massive tech tenants rent that capacity for decades. To meet tenant demand, KEEL assembled a pipeline of 2.2 gigawatts of power capacity. That involves securing direct access to major physical energy sources, including large-scale hydropower networks across North America. But removing the old servers was only half the battle. To finance a multi-gigawatt build-out, the company had to reorganize its internal structure to satisfy Wall Street capital requirements. They re-domiciled to the United States, adopted standard U.S. accounting practices, and executed a $458 million raise. A 2.2 gigawatt pipeline provides no advantage if enterprise tenants do not trust the corporate governance managing that capacity. KEEL had to build a corporate entity that institutional finance could safely invest in. The financial markets are already responding to the transition. KEEL is successfully detaching its market valuation from the boom and bust cycles of Bitcoin. Financial analysts refer to this as a structural re-rating. By locking in predictable, long-term tenant agreements, KEEL is now being valued by the metrics of a high-tier digital real estate developer rather than a crypto miner. This operational shift triggered their inclusion in the Russell 3000 index. That designation forces passive institutional funds to accumulate their stock, providing a steady baseline of investment. Prominent artificial intelligence researchers, including Leopold Aschenbrenner, are actively accumulating stakes in the company. The technology sector recognizes that physical, grid-connected infrastructure is the true bottleneck to their progress. The sites that once housed Bitcoin hardware are now cleared out, prepped, and wired for high-density AI workloads. As the computing sector accelerates, the economic advantage moves to the landlords. The companies owning the land, the permits, and the high-voltage grid connections now control the pace of the entire AI revolution.